How can the company maximize economic value in order to maximize shareholder value? The analysis calls for the application of the prospect theory, a behavioral model that shows how people decide between alternatives that involve risk and uncertainty. It demonstrates that people think in terms of expected utility relative to a reference point rather than absolute outcomes. The syndicate applied this theory to determining what solutions to consider when designing a solution. A total of 7 possible solutions were identified. These included expanding supply by expanding current mining operations and Tier 1 assets at massive capital expenditure, expanding access to markets for key consumers by creating an e-commerce platform and additional product development, improving current operating efficiencies by improving asset reliability and mechanization, stimulate demand for the use of PGMs by conducting research for new and different uses of PGMs, continue to decrease operating costs, consider forward integration by leveraging recycling opportunities, increase demand and access to markets through cross-selling to sister companies within the Anglo-American group. These opportunities were grouped into 3 broad categories, namely, increasing operational efficiencies, stimulating demand, and increasing stakeholder partnerships. It was agreed that by addressing all 3 categories in a systematic way, risk and uncertainty could be decreased while increasing stakeholder value. Part of the identified solution includes improving the current operating efficiencies and asset reliability. The proposed manner in which this can be achieved is firstly by mechanization of the mining cycle and implementation of strict asset maintenance systems with the discipline to manage the maintenance in conjunction with optimized production. By increasing throughput at the current low end of the cost curve, productivity and yield efficiency will result in higher production from the existing assets. This solution is a low-cost solution and will impact capital expenditure. The second solution involves stimulating demand for PGM production by conducting research and development into technology which can improve lives. Such research may involve the development of an efficient fuel-less vehicle or a pharmaceutical alternative to curing cancer, or alternatively an Airbus jet that is propelled by fuel cell technology. By stimulating demand, prices would increase and opportunity for expansion may become more justified and less of a risk. Finally, by increasing stakeholder partnerships, the theory of shared value can be leveraged, thereby increasing profitability for the company and its shareholders and stakeholders. The suggested solution to be implemented is the development of an e-commerce platform whereby regular customers can secure, order, and purchase various forms of the product, from mined ore to finely crafted jewelry, by leveraging the virtual ecosystem. It is further suggested that this solution leverage the opportunity to access all consumers with access to the larger Anglo-American group in order to exploit access to customers who may not generally use the precious metals. Fouillon says, in every decision we take, we must constantly ensure that we are positioning the mind and the business correctly to return value to our stakeholders, especially knowing we are competing for capital in a tight market. Our vision remains to continue producing the cheapest platinum ounce in the group. We firmly believe long-term supply and demand fundamentals for PGM remain attractive despite current price levels. Rising demand from existing applications and those being developed, as well as stimulatory measures to develop the PGM market, will support sustainable demand and will in time foster growth. To manage short-term price fluctuations, we operate our mines cost-effectively and profitably, exiting operations that are not strategic to our portfolio. Thank you for listening to our Petrokucha. This has been Syndicate Group 1.